Hi, good evening everyone. Welcome to WealthMills Securities weekly market briefing. Today I want to discuss with you about the last quarter and results for the market and how the market went last week. That's what I want to discuss with you all. If you observe FPIs, the farm portfolio investors are continues to be net sellers throughout the July month. They sold to a tune of more than $2 billion from Indian markets, which created a negative sentiment in the market that caused the market to come down significantly. So if we observe the key drivers for market in short term are, the first one is liquidity. So there is a clear liquidity crunch in the market, and the sentiment is the second factor. The FPI continues selling, foreign portfolio investors continue selling, that put pressure on the markets, and the market sentiment continues to prevail in a negative territory. And the third other factor is the earnings. The earnings are not attractive for the Q1. If we observe, very few companies posted positive results, but they are not encouraging and they are not up to the expectations of the market. Since the earnings are not attractive, the valuations of the markets are not improved. So that could not able to attract the buying interest in the July month. But there are some few positive factors are there if we analyze. One is the crude oil prices have been reduced significantly, which is a very positive factor that will cool down the inflation, and it will help the government to reduce their deficits. Second factor is one of the worry from past 1.5 months was monsoon was not progressing well throughout India. So last 15 days, if you observe, the deficit of monsoon has came down significantly, and the monsoon has been progressing well throughout India, as India's a significant portion of GDP is come from the rural areas. So monsoon still plays a very significant role in terms of the Indian economy is concerned. The third one is as crude oil and the monsoon helps the inflation levels to come down, it will help the RBI Monetary Policy Committee meeting, which is scheduled in the first week of August. From there we can expect some significant amount of significant percentage of rate cut we can expect from RBI, which will improve the sentiment of the market in the medium to short term, and that will help the market to go up. The news what we are getting is the one of the prime reason why FPIs have been withdrawing money from Indian markets was the category 3 schedule of foreign portfolio investors, which are trust, which forms nearly 30 to 40% of the FPI flows to India. They will be the news is the Prime Minister Office and the Minister of Finance are doing consultations to take care about the apprehensions of foreign portfolio investors with respect to the surcharge which was imposed in the last budget. So these factors will help the markets to tune into the positive territory. And one of the reason why the market sentiment has been so low at this point of time, the corporate profits to GDP ratio, which is one of the measurement which indicates how the corporate profits are part of the complete GDP ratio, is at less than 2%, and this percentage is not improving in India. So the corporate profits have been not significantly going up with respect to the GDP. This ratio is not improved in last couple of years. So this has been one cause of concern for the markets. But if you see the broader indices as a whole, there are ample opportunities available to invest. This is always our endeavor at WealthMills Securities to help you with those pockets. This is the overall market scenario that's prevailing in the markets, and what led the complete sell-off in the month of July. This is Kranthi signing off. Thank you.